I'm Dan Fitzpatrick at StockMarketMentor.com. Look, every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money, right? Well, good trading takes more than just pushing the buy button every morning to get the stock you saw on TV last night into your portfolio. Man, that's a mouthful. Okay, I'm here to help you make money on these three stocks I saw on TV. We're going to talk about Shake Shack, which, again, I have never eaten there, but I'm sure their shakes are Shackalicious. But the company reported earnings. They weren't that great, as you can see. So what happened to the stock? Let's look at it after hours. Huge decline right away. Well, it looks to me like the price level for this stock, where everybody seems to be comfortable with it, is around this area, below 37.50, between 37.50 and 37. Okay, so let's assume that the stock opens up at this level tomorrow. My bet is after this kind of sell-off, okay, the stock's down about 8% or so, you'll probably see a little bit of a bounce. You could probably, and I'm not a fortune teller, but you could probably buy this stock at the open on Thursday and make some money. You just have to have a tight stop on it. Because if the stock continues to fall, and we've seen stocks like this where they gap down on bad earnings, and man, it just gets worse and worse. So don't just buy the stock because old Dan Fitzpatrick says you probably couldn't make some money. I'm saying if the stock's down this low and it starts showing some kind of support, I would just say this: you go ahead and buy the stock as long as it is above the opening print. If it's below the opening print, then you know that the stock opened up and is met with even more selling. You don't want to be the guy taking those traders out of their bad trades. Stand aside, let somebody else catch that knife. But if the stock is trading above the opening print, then sure, buy some stock. It's a day trade. But what about other than that? I look at this, and the stock sure has had potential in coming out of this, a nice long base. It's, IPO, you can see what's happened here. I don't need to describe it, but it's been in a pretty long base basically for this year, for 2016. I think this pullback, all this does, frankly, is perpetuate the base. That's it. I saw some negative, down talk on CNBC about it after hours, and I get that. But I don't really care so much about the fundamentals or whether Shake Shack gets their customers or this or that. Though I have to tell you, this company knows who its damn customers are. Every company knows who its customers are. Seems a little bit hubristic. I don't know if that's a word, but if it's not, it should be. To be saying that the company doesn't get who its customers are. They built their business on knowing their customers. But what we're seeing here is, let's look and see the stock, and let's see what the buyers and sellers are doing. If the buyers and sellers, our customers, stop the stock right here, all this is doing is perpetuating this sideways channel. Let it go. If the stock then, and I'm not talking tomorrow, I'm talking next week, 2 weeks from now, whatever. If the stock starts trading back above the 50 and the 200-day moving average, then this base that I say is being perpetuated is actually starting to become an uptrend of higher highs and higher lows. But we got to wait for that. We don't know whether that's going to happen. I'm just drawing the maybe kind of sort of mights in the future. So that's my deal on Shake Shack. Now, Blue Buffalo, my dog Tanya's favorite stock. As she gets older, she does like pet meds more and more. But anyway, this stock, the company reports earnings. It's up after hours. This is a little different. I would actually look to buy this stock in the morning, but although I'll say it again, as long as the stock is above the opening print there too, because we see these stocks kind of gap and crap a little bit. See my chart of the day video on jd.com in that respect. But so as long as the stock stays above its opening print, then you got to look at this as a volatility squeeze that's starting to play out. Okay, and then the last one here we're going to look at is Chesapeake. Company reported earnings after hours. It's up a bit. You know, I don't get, you know, too lathered up about this. I mean, it's up 5%, and that's great if you bought and held it over earnings. But the stock's still range bound. The reason it's going up is because they reported that they're selling this area in Texas called the Barnett Shale area. And what they're, you know, forget about, oh, that's worthless. It doesn't, that's not what we're talking about. It's improving their balance sheet. I mean, these guys have had a lot of debt, a lot of issues, which is why they've been below $5, which is something that drives any CEO crazy. So they're improving their liquidity and their balance sheet. That's why the stock is up. I think this is a stock that you can buy right here. So, okay, that's it for this 3 stocks I saw on TV video. If you are not on my free email list, please check me out over at stockmarketmentor.com. I send out free videos every night, and so you know, I really try to make them money-making videos under the theory that if you start making money on my free videos, you're either going to decide, wow, I want to make more money, so maybe I go ahead and join. Or if you're an Irish Catholic like I am, you're going to feel guilty about making that money, so then you just kind of get guilted into being a member, okay? They're 2 sides of the same coin. So I want you to get over there and get on my free chart video email list, and then we'll just take it 1 step at a time.